Hey guys, I hope everybody is doing well. I'm making this video specifically for my brother and sisters in blue and those that support us. Um, I'm sending this video out to a lot of police officers nationwide that have asked for it regarding day trading, penny trading, and so forth. And this is a little introductory video to help you with stuff that I've learned over the past year day trading, and how I've become very successful with it in my own shoes. For those of you that don't know me, I'm sending this to people that I know, obviously, but there's a lot of people that don't know me. My name's Stanley Barsh, and I had almost 18 years in law enforcement. I was a dispatcher with Montgomery County Police from 98 to '02. I was a Montgomery County Deputy Sheriff '02 to '04. I was a Tacoma Park Police Officer '04 to '05. Annapolis Police '05 to '07, and then I was Montgomery County Police 2007 until I retired in 2016, disability. So that's a little bit about my history. I own a real estate company here in the DC area, licensed DC, Maryland, and Virginia. I um, I am the broker of the company, and I am full time selling real estate on top of day trading. And I've been lucky to have been blessed in both avenues and given a lot of trust to people who follow me on Twitter, and also a lot of trust to people who trust me to sell their homes. So I just want to cut into this real quick and get to it. Some acronyms that you're going to hear a lot in the market, and it's good for you to take some notes here. And I'll also send it to you in a word for, or just quick doc. These are just some initials, not many, but you're going to hear a lot PM, which means pre-market. You're going to hear PH, which means power hour. Power hour is usually 3 to 4 o'clock. The pre-market is usually 7 a.m. to 9:30 when the market opens, but some companies start at 4 a.m. So you have what I call the pre-market, because not a lot of brokers have it. And then the pre-market, to me, it starts at 7. That's what time my broker starts. And then after hours. After hours, the market shuts down at 4 p.m. and it goes until 8 p.m. So that's your after hours, AH. So you got PM, pre-market, PH, power hour. That's when you try to boost whatever's going on for the day, and after hour, and things can continue on. Also, you might hear BK, which is bankruptcy. People type that a lot. DMA, which is daily moving average. You might hear that in different formats, and I'm going to go over on this video for you down here further along. FOMO, you'll hear that a lot. FOMO, that's fear of missing out. HOD, HOD, that is high on the day. And NHOD, new high on day. And then you might hear LOD, low on day as well. So these are good acronyms for you to familiarize yourself with, so you're not lost in the sand when you're first starting out. So like I said, some platforms start at 7 a.m. for pre-market, usually around Ameritrade, E-Trade, and some others start at 7 a.m., allow you to start trading in the pre-market, and after hours until 8 p.m. IB and Webull trade from 4 a.m. to 8 p.m. And then Robinhood starts at 9 a.m. And these are very important times for you to understand, because certain things happen around those times when all these different brokers start to open. Now, one thing as a day trader, particularly in pennies or any trading you do, is you want to always have money available, always have cash available, so that you can buy on red days and be ready to sell when the market goes green, when it's boosting. Okay, if you know what you have and there's good catalyst or good stuff coming down the road, and you know that it is a strong stock, whether it's a penny or whether it's a dollar stock or whatever, you always want to keep some money in the bank to average down on the red days. What averaging now means, let's say you have 1,000 shares in a stock that's $1, okay, and you have $1,000 worth of this stock, and the stock drops to 80 cents, because it's a red day, whatever's going on, and it gives you a chance to, maybe buy half of that. I wouldn't say, match it at 100%, but maybe buy $500 worth of shares at 80 cents, and then it'll average it down a little bit, maybe to around 90, 95 cents. And so that way, when it starts to come back up, you can start to make a little extra money on the way up the food chain as the market goes green, maybe later that day, maybe the next couple days or whatever. So you always want to keep money in the bank. The good rule of thumb is you want to keep 90 or about 70% cash, 30% in investments at any given time. It's very hard to do. The reason why is because the reason why you want to have that is so that you always have money to pull the trigger on something big or something quick or whatever the case is. It is very hard, and I can't say that I follow that rule of thumb myself, but it is a good rule. Just in any down market, whatever's going on. So going back to DMA, daily moving average, one thing that you'll hear a lot is like 50 DMA and 200 DMA. Okay, and these are some big numbers. 50 DMA, you'll hear somebody say, this stock is going over to 50 DMA. That means that it is trading above the daily moving average. It's something to watch because that means that something big is, or it's about to pop a little bit here, depending on what's going on, with the charts and stuff like that. Also, if it's above the 200 DMA, that means that it's really triggered for movement. Some other commentary that you're going to hear is golden cross and double golden cross. Okay, the golden cross is really big. That is when a stock essentially crosses over, a big hurdle to make its first big move. And then when you hear double golden cross, that means it's in for, a really big run coming soon. It doesn't mean that it'll happen immediately, but it's a big hurdle to overcome, mainly with volume or just, catalysts or whatever the case is. But it's huge, number one, to cross over to golden cross or double golden cross, and it's huge to stay above it because it gives it room and motion to move here in the future. Something that you need to familiarize yourself with, particularly if you decide to day trade penny stocks, is a lot of stuff happens with penny stocks. As they're moving, okay, as they're rising, prices rising, and stuff like that. You never want to make it into a permanent investment. You never want to make it into a long-term investment unless you know what you have and unless you know it's safe to have it at that position. Let me give you an example. A stock that is 30 cents, and whether it's in oil, whether it's retail, whatever the case is, you have a situation where it's 30 cents, and for whatever reason or another, it's running up to $1, then $1.50, then $2. Okay, you don't want to hold it. You want to take some gains on the way up and potentially sell at some point while it's up there, because you don't want to end up losing the bag. And how do you lose your bag? What ends up happening is companies do what they call offerings. Okay, this number one causes the stock to drop immediately because they don't know anything about what's going on with the offering, and they don't know what the offering price is, or the things that are going along with the offering. So you might have something that's trending at $1.50 that went up from 30 cents, whether in a day or two or whatever, and then all of a sudden it drops down to like 75 cents. Okay. And now, you were holding on for hope that it was going to go to $2 to $3, and it doesn't happen. And now what you had you no longer have. So direct offering is probably one of the best offerings that you can get. It's something that, closes fairly quickly, usually in a couple days, 2 to 3 days. And it's pretty straightforward. It'll usually have attached what the price is. So let's say it's at, they might say at market, so whatever it is at that moment, or they might say 65 cents or whatever. And once it closes, then the stock starts to pop again. But I will tell this, while I'm on the subject of offerings, whenever an offering happens, it's great to find what I call the bottom of once it drops, because the stock itself is going to ride right back up to, maybe not to where it was trending, but it'll start to rise back up. So let's say you're at $1.50 and a thing jumps down to like 75 cents, and 75 cents is the bottom. You want to go ahead and grab a hold of some and then take the free ride up, maybe to $1.90, whatever. It's a free ride up. People panic sell. You are sitting there by your computer or your phone, and you're going to buy that thing and ride that puppy up. Shelf offering. So sometimes when people hear offering, and they'll freak out, blah, blah, blah. Shelf offering means that it is an offering, but it's where they can utilize the offering down the road. So they might say, We're going to do a shelf offering at X amount, whatever it is, at 30 cents, whatever, down the road. And that's something, if you're playing that stock on and off again, on and off again, you're going to have to keep that in your mind that there's a shelf offering and that they can execute at any time. And at that point, it does become a real offering. So just keep that in mind. Shelf offering, really not a bad thing. It's what, it's just something, that they do to keep things moving. I'll explain to you what offerings are here in a minute. Mixed shelf offering is another thing that you need to keep in mind. Again, mixed shelf offering to shelf offering is not that bad of a thing. Public offering is the one thing that is hard to overcome for a lot of people, because what it does is it puts this thing called dilution in the market. So what happens is, you have a direct offering, let's just say of $10 million, okay? That's how much they're pulling out of the stocks. And they're adding in essentially, it could be 3 million stocks, could be 10 million stocks, whatever it is. And they're putting it back into the stock market as the price starts to rise. So let's say the stock is at like 42 cents. And it just cannot leave the gate. It's at 42 cents and it's 43 cents, yada yada, and you just can't seem to get up a little bit. Well, what ends up happening is they're diluting it. They're dropping in these stocks that they just did with the public offering, and they're letting it merge in with the market itself. So it's holding the market down a little bit, but volume really kills it. Volume will take it, put it to rest, and it'll move up. Warrants. Not you're under arrest, but warrants is essentially money that they owe to companies. It might be to bankers, to banks that loan them money and stuff like that. So what an offering does essentially is, let's say a stock is at 30 cents initially, it goes to $1.50, and the offering price is $1. Okay, and what it does is it gives the company money to operate, for operating funds. They'll say what the offering is for, what they're going to use it for. Okay, it'll be a situation where they're going to use it for operating expenses. Maybe if it's a bio company, they're using it to do more science research, stuff like that. Or if it's a company dealing with COVID, that is helping them to fund the drugs that they're trying to come up with, and so forth. It's just operating money. The problem is, and this is what freaks everybody out, is that a lot of times these companies do these offerings, investors panic sell, and then what ends up happening is these companies just don't do crap with the money, and then do another offering. So if you hear people talking in the community about, this company has done like 5 offerings, you just got to be careful when you're entering that stock. It's just something that's going to come naturally as you're listening to it and so forth. Something that you have to keep in mind. If you ever hear Wainwright, anybody mentioning that this is Wainwright, be careful. It's Wainwright. This is a company that does offerings, but they make the stock rise by fueling it up. They'll come out with some press release a day ahead of time or something like that, and then they'll cause the stock to rise to abnormal amounts. I'm talking about like from $2 all the way up to $9, $10. And then what they'll do is, at time period, they'll pull the plug, and that thing will drop from $10 down to $3 or $2, and you don't even know what hit you. The largest amount of money that I lost on a Wainwright was $19,000, and I lost it in 10 seconds. My mentor, he said, don't mess with this. This is Wainwright, 99%. I didn't even know what it was at the time. So I was like, yeah, whatever, I'm riding it up. And, what I did was I kept buying and selling on the way up, buying on the dips and stuff like that. And I had 2,500 shares, and it was dipping a little bit. It was going down like 5-10 cents. So I bought another 2,500 so that I can, average it down a little bit. And as soon as I clicked enter, I'm not lying to you, like within 5 seconds of me clicking enter, they pulled the plug, and that thing dropped like a fat chick on a seesaw. And I didn't even know what to do. But I lost 19 grand. I was able to grab a hold of sale price on the way down. And I could have lost a lot more, actually. I could have probably lost about 30,000, but I was able to pull the trigger fast enough on the way down. So the one thing, this is a hidden technique that I use, and this is where I beg you. If you're going to share this video with anybody, I just beg you that it's someone in law enforcement, that this video is not like going around, making its way around the web and stuff like that. This is a trick, okay? Setting buys, setting sales, okay? Let's say you have a stock that is about to move. Let's say a company says, we got the cure to COVID, and this is going to be big. You just saw the news, and you can see the stock market starting to trigger. You can see the green and the red and everything starting to move real quick. And let's just say the stock is at $1 right now or whatever, and you can see it. It's moving up very quickly. All right. So what you want to do is, if it's that hot, like the news is that hot, what I do is I'll set the bar up to like $1.05 or $1.10, 5 or 10 cents above, and try to grab a hold what stocks I need. If I'm going to buy 10,000 shares, 100,000 shares, 50,000, whatever I'm going to buy, I will go ahead and go up 5 or 10 cents higher in hopes that I can get filled on that. And then hopefully I get filled and then I'll be able to ride up the wave. What it does is, let's say it's at $1, and that's what the ask is. Everybody's buying at that moment. If you set it to 105 or 110, it'll give you a fill of the amount you need, whatever's being sold at that moment, up to $1.05 or $1.10. And you might ask for 10,000 shares, and you might end up getting a fill of like 2,500 shares. Because everyone's doing the same thing. So anyway, that's my trick. Same thing, setting the sales. Let's say you see, you're on a stock that's rising quickly, and everyone's selling off quickly, and it's starting to drop very quickly. Let's say it's at $1 and it's dropping rapidly. All of a sudden you see 95 cents, 90 cents. Same thing. I'll even go lower if I see it dropping that fast, and I see it on the chart going fast. I'll set my sell to 80 cents, and I'll get anything that's available from 80 cents up to $1. It is what it is. It's just what you have to do to make it. You always, every time you enter into a stock, no matter what it is, you have to have mental stops in place. I will not lose but X amount of dollars on this. This is what I'm going to do, and you need to stick with your plan. You have to have mental stops. Everyone talks about stop losses and setting it in the computer. Listen, here's the deal. I don't do that. It's I'm the type of guy that I've got to be the one to push the button because the market is so volatile. It can go either direction anytime. This is what I do. This is how I do it. I have a mental stop. I have a mental gain, and that's it. When you're buying a stock, whether this is the amount that I play with, so I'm just giving you an example. You have to have an idea of what you're doing. You have to know what you're doing entering that stock, whether it's a fast moving stock or whether it's a swing or a long shot. Okay, so let's say I'm buying 10,000 shares, and I'm saying to myself, I want to make a grand. A grand on 10,000 shares is 10 cents. Okay, so if I'm buying it at 30 cents and it goes up to 40 cents, and I have 10,000 shares, it's $1,000 I make on 10 cents. Okay, you have to know what your plan is going in and what you want out of it. Okay, the plan doesn't always form, and sometimes you guys say, what, I made 500, I'm out, whatever, and on to the next one or whatever, or it goes down, and you have your mental stop and it kicks in. You have to stick, excuse me, you have to stick to your plan regardless what it is. Okay. Don't be afraid to take losses. It's better to take a loss than not. Today I was in a stock. It's actually a pretty good stock, UV stock for COVID, and I bought it kind of high. I bought it $3.50. The market killed it today, and it dropped down to $3. And I was like, I'm out. If it hits 3, I'm out. And I am so lucky. I hit enter. I had 7,600 shares. And as soon as I sold it off to 3, it dropped down to like $1.60. I would have lost another probably $4,000. I lost like three or 4 grand on it. But it is what it is, and take the loss and move on. You'll hear day trade, swings, and longs. Here's the deal, okay, guys? Anything can be a day trade, anything can be a swing, anything can be a long, okay? Something might start off as a day trade, like, you think that, you're entering it for a quick boost, and it turns out that you're going to swing it, which means that you're holding it for a week or a few days or whatever. That's a swing. Long means, that it could be 2-3 weeks. I mean, I have some stocks that I've been holding for a month and a half. I know the catalyst is there. I know the news is coming. It just hasn't come, and I'm being patient with it. I might be ready at any moment and so forth. But long means that you know what you have, that it's not a risk factor to hold it, and that's what it is. And same thing, a swing can turn into a day trade. You may be buying into something that you think, okay, I'm buying into this, and this is going to be a day swing, and it turns into a day trade. Sometimes you just don't know. Once your plan is met, you need to execute. Don't be greedy. Greedy will get you lost. It's better to take a dollar gain than a $10 loss. Okay. Always take gains on the way up. always take gains on the way up, whether it's a swing, whether it's day trade. Let's say this puppy dog is going, it's up 10 cents, 15 cents, whatever. Take some gains on the way up. Book what I say 2/3 of your portfolio. Let's say you have 10,000 shares. You book 7,500, and then you turn around and ride the rest for what I call free. Okay, so take it easy, book some gains, and then see where the rest of it rides. Okay, always book some. Terminology you're going to hear: gap up, gap down, gapper. Okay, gap up means let's say you have a stock at $1.30, and there's a gap to fill in between $1.30 and $1.50, and then from $1.50 it should shoot off. That's what gap up means. There's a gap to fill. Once that gap gets filled up, you're gonna that thing should rock and roll. So whenever you hear this is about to gap up, then these are good words to hear. Same thing if they said the stock gap down. It's something that you need to keep in the back of your mind, that it's a good time to buy down there. If you're a gapper. So gapper means that you're in the late market or after hour market. Gapper means that this is going to continue until tomorrow morning, and in the pre-market it should gap up. So gapper means that it's happening overnight. You're going to hear a lot of people talk about PDT, which is the day trading rule of having $25,000 in your account to day trade. Okay, every broker's different with how many day trades you're allowed to do in one day. If you have under 25,000, if you have 25,000, you could day trade 1,000 times a day. It doesn't matter. If you have less than 25,000, you can only day trade X amount of times. I think it's usually around 3 times a day, which means you could trade in and out of a stock 3 times a day. But I warn you, if you have under 25,000 shares, most of the brokers require, or it happens that they when you sell a stock, your money is not available for 48 hours. It's called a cash deal. So you're trading as cash. You got to wait 48 hours for that cash to clear. If you've been holding the stock, this is my experience. You've been holding the stock long enough. When you sell that stock, sometimes the funds are immediately available. However, whatever you buy that day, you have to wait until the following day in order to sell it. Otherwise, you're going to get a margin call or a day trade call. So just keep that in mind. PDT over 25,000. That is when the handcuffs are off and you can have fun all day long. Under 25,000, you are at the mercy of doing cash transactions. It is what it is. That is a SEC rule. That is nothing to do with broker to broker. Now, if you're monitoring Twitter and stuff like that, the dollar sign, will give you a lot of information on a stock. You click, dollar sign Mark, M-A-R-K. It's a big stock that's going on right now. Dollar sign Mark. And then you click latest. So you're looking at the most recent information that people are talking about. That is one way to get a lot of information of what's trending and so forth. Okay. Now, with that being said, if you're following the right people and you start to hear, about filings, people are going to say 8K is out, or a 3S is out, or a 10K is out, and stuff like that. These are filings that are done through the SEC. And these are things without, sometimes you're not going to be able to read it quick enough, but the market will dissect it for you. Sometimes they'll say 8K out, this is what it says, or 10K out, this is what it says. And then you can figure out really quickly if it's going to be good or bad. Or if you're not sure, you could tune in to the stock itself through your broker, and you can see if that thing's popping or if it's dropping, and then from there you can make a decision if you're going to enter or not. If a lot of these times you don't have time to figure it out, you just go with it. Also, if you hear bankruptcy, BK, you want to stay clear of it until it breaks down. It's very similar to an offering. Sometimes the way it's handled, if a BK is put out and they say bankruptcy, JCPenney, the stock drops like a freaking hot pocket. Okay. But if you find a bottom, you could ride up some, and it's as stupid as it sounds to run on a bankruptcy. With that being said, if they file bankruptcy, if a company files bankruptcy, it goes to what they call OTC, which is not over the counter, but it's paper trade, or not paper trade. I'm sorry, pink paper. And what it is that is not what the stock exchange that is, off the stock market. You can still trade with some brokers. E-Trade lets you trade with it. Some others do, not all do. And what happens is, in the sense of J.C. Penney, it was hovering 18 to 20 cents. Then it dropped off to 11 cents in OTC. That got bought up quickly, and then it went up to 15 cents. And then the news of court shot it up, and it went over 45 cents. I don't think it went higher, 45, 50 cents, something like that. It was trending very nicely. A lot of people made good money. Scalping, you'll hear that a lot. Scalping is when essentially you're grabbing on some shares real quick. You're riding a quick wave and you're selling. Okay, that's what scalping means. Some terminologies that, and I'm breaking this up into different sections, so I'm not boring you all with one subject and dropping a bomb on you. You're going to hear at the bottom. So this stock is at the bottom right now, meaning that this thing is about to pop, or this thing is about to rise at some point, and it's a good time to buy. So if you hear somebody on Twitter or elsewhere in chat room or something saying this stock's at the bottom, this is where you want to consider starting your position. A good thing for you to do is if you need to do a quick analysis, that's not going to cause people to jump up in the air and start buying up quick. It will start filling up somewhat quick, but not really. You want to turn on your chart. You want to look to see where it's at as far as the bottom of the day and what the high is for today, and decide if you're going to enter and sort of ride the wave. Bottom of the chart means on the chart itself. However, you also hear the low, near the low of the day, or the bottom of the day, or whatever. These are all things that are good things for you to say that you should consider buying. When you hear the word support, so say, hey, this stock is trading at $1, support is at 90. That means that if it drops to 90, there should be a safety net to cover it a little bit. There's usually two layers of supports, so one might be at 90 and one might be at 75 cents. And these are the two catcher nets for what's going on. Okay, so you have your support. In the same token, you have resistance going up. Resistance is caused by many different things. Familiarize yourself with walls. Familiarize yourselves with MM, and familiarize yourself with shorts and bears. Okay, these are the people. These are the things that causes resistance, and usually it's very easy, or it's you see it on a chart. But in some chat rooms, you have a command that you can go in and you can check resistance on it. They'll usually have two resistance areas. The thing that breaks resistance is a lot of volume and a lot of persistence. And sometimes you might hear people saying that it's testing resistance, and then you'll hear it say it's going to probably test it again later. And then you might hear somebody say, hey, this is the third time it's testing resistance. This should do it. It's just people testing it. The other day, a stock, Genius, GNUS, was trending probably in the low fives. I called it out on Twitter. The thing shot up to $7.20. And what happened was, it was just enough volume to get this thing to go up. It was not enough volume to break resistance. And what happens, and this does happen, is it bounced off the resistance wall like a bouncy ball, like you couldn't believe. And it bounced that thing from 719 all the way down to 650 within a second. Without the proper volume to break it, it could bounce off the wall like it's nobody's business. So just be aware of that and what to look for. Again, dilution, you want to be paying attention to when people say, hey, this stock is diluted. Be careful. It means that it's going to be a while before this thing goes up. You're basically pouring money into something that that's just not going to move anytime soon. Oversold. If you hear somebody say, this looks oversold or this is oversold, that means that there's been so much buying in that area that thing's about to skyrocket. Oversold is a good word, and it's a good key word to keep in mind when looking at it. Volume. You need to be very, very aware of what volume is doing on a stock that you're about to buy in, okay? Let me tell you why, okay? There are a lot of assholes out here in the stock market on Twitter, these big guys that you might follow, and they will call out some bullshit stocks, that have like a volume of like 20K. Okay, 20K is crap. Okay, what ends up happening is you end up buying the stock. You end up buying a stock of that has, because you get excited. They're like, oh, blah blah blah, this is what's going on, and you jump on the wall. And you're like, oh my god, this is great, blah blah, and you buy it, right? And let's say it's at $2, and the buy it, the bid you see on there is like $2. The ask is like 250. You scoop it up, right? And you scoop up that 250. And then what happens is nothing's happening. It starts to go down 240, 230, 220. And then what ends up happening is a lot of times, because there's no volume, right? So they're controlling, they might find a shitty stock and just call it out as something big. And then you get stuck in this web. And then what ends up happening is the same person that called it out is the same person that's going to short you, which means that they're going to create a buy down at like, $2 or 210 or whatever, and they're gonna bid on it, and they are going to short you, which means that your walk down from 250 or wherever you're at, they're getting paid from 250 down to 210. So they got you on the way up where they sold it to you for 250, and then they're going to get paid on the way down. So just be very careful about volume, not to be discouraged from, again, a company having some major news and, there's been no volume on it this morning. It's completely different. Like, news on something, truly news, and you're seeing it with your eyes. That's something that's about to pop. The volume will come in instantaneously and that thing will start rocking. I'm talking about just some bullshit, oh, this stock is going to the moon today or whatever. And then you get caught up in a web and it's just not going anywhere. Okay. So just be very careful on that. So we talked about support, resistance. We talked about dilution, oversold, volume, DD. You hear DD a lot. Due diligence. You need to do your due diligence. Don't trust anybody's shit. Know what you're getting into. You're going to hear a lot of different things going on with different stocks and stuff like that. You need to be very, very aware of, doing your own due diligence. It's hard to do, obviously, if something's being called out and you're following. But at some point, you're going to take a step back and you're going to be like, okay, I got like 9 stocks. And because I bought it because somebody told me to or whatever. And then you're going to start doing your research and you're going to start figuring out, should I keep it or should I sell it? So you want to go ahead and consider doing your due diligence so you know what you have or don't have. Things that make the market move. Catalyst, due diligence. Catalyst meaning, things that are going on with the stocks that's found, behind the scenes. News, PRs that come out, press releases that come out. Speculations, like one big one that we did, UAVS, right? This guy was like 30 cents and then it moved up to like 95 cents and it skyrocketed over $5. My group and my tweet made that thing go over $5. We found a hidden video between them and Amazon that was later copyrighted and so forth, which was a hidden video on this founder's daughter's website, her YouTube account, as well as her personal website, and it's since been privatized. We still have a copy though. We found it. Nobody knows. We're the only ones that have it. No one else has it. We're able to recoup it, so we actually have the video. Anyway, that stock ended up bouncing up to like over $5. It's still hovering in twos. Everyone knows it's Amazon, but everyone's waiting for some kind of confirmation, and they're claiming that they signed an NDA, non-disclosure, paperwork. So we'll see if we ever find that out or whatever. Pumps. So, somebody's pumping the market, pumping the stock and stuff like that. Everything's a pump, let's be honest. But, just be careful for when it gets sold and, you're getting stuck with bags, okay? You don't want to get stuck with bags. Low floats and micro floats. If you hear somebody say, hey, this is what's going on with this is a low float. Low float and micro floats mean that this thing can run quick and fast. You just want to be very careful that when you're entering into these low floats and micro floats, that you're entering at a small range and not at a huge range, okay? So if you usually play 2,000 shares, you might want to enter 200 shares, okay? This thing could pop by the dollars, but, you want to be able to minimize your loss if this thing drops fast on you. It is risky. You got to play it smart and so forth. Sometimes you don't know if it's a low float because you don't even have time to research it first. But if they say it, low float, micro float, just be aware. That should sort of tell you to go a little less on what's going on because it can go up fast and go down very fast as well. Things that make the stock market move. Sectors. So let's say, we're coming into COVID-19 plays again, right? It just happened on the first round, and we are about to enter into a zone where you're about to get rich again on the second round. Sectors. So let's say like mask plays are big. You're going to have 4 or 5 of those. You're going to have drone plays for COVID-19. There's a set of those. You're going to have, cleaning up, cleaning up stuff, with hospital stuff. that's going to go. Anything and everything you can imagine gets played in COVID-19. Also, delivery companies, that's going to get played. And there's different ones, and there's different ones that run off of different ones. And you're going to pick these up as you go along, and people will say it, and you'll hear it over and over again, and then you'll start to get used to it, and you'll start to have your own memory bank. Same thing as non-COVID plays like bios. You might have 6 or 7 bio companies that run together. These are all things that you need to keep in the back of your mind, that help you, maneuver in between. Okay, sympathy play. So one good example is you'll hear Mark, MARK. They do thermal imaging, and FRSX does some thermal imaging. You're going to hear Mark running, and then you're going to hear people say sympathy on Mark, FRSX. So that means that one should run off of it. Same thing with drones. You're going to hear like UAVS, and then you're going to have Viesel's going to run sympathy off of UAVS, or vice versa. These things run together. It just is what it is. If one's running even on its own PR or something, the other one's going to catch wind of it, and it's going to run that one up also. It might not run as hard, but it'll run up a little bit, give you a chance to make a couple dollars on it. So also to keep in mind, sympathy plays flavors of the week. So or what's going on in the market at the moment. So it depends on what's on the news that day. Okay, guys, it really does. You could think that tomorrow's COVID-19, but you could turn around and I don't know, it'll be a food day. It'll be like fast food day. I mean, you just never know what tomorrow's going to bring. It just depends on what's going on in the news and so forth. Sometimes that really you sort of play off the news of the day. It just is what it is. You can't make it. So that's the flavor of the week or of the day. Dips. Okay, guys. Dips for your chips. Pre-market dips, you're going to get some. So you're going to get some sell-off. Pre-market, a lot of people sell off right before Robinhood opens at 9. The PM people sell off then. A lot of them sell off right before the market opens. Okay, so those are your pre-market dips. So you have pre-market dips because Robinhood is coming on, and everybody's going to trying to avoid them taking all their profits for whatever is booming. And then you're going to have a Robinhood dip when they open up at 9. They're going to take their profits or take their losses. And then these are all dips. What dips means is if you have a good stock, you know what you're holding, and it's at the average of where it should be. These are a good time to average down real quick on these dips. Dips does not mean that the market or that the stock is collapsing. It just means simply that it gives you an opportunity to buy a little bit more for a little bit less. Then you have the open dip, like I said. You have lunch dips. So like 11:30 to 12:30, you have that dip. And then you just have regular dips throughout the day. Not just because the stock has fallen a few cents or 5 cents does not mean that that is collapsing. Okay. Then chart patterns, I'm not even going to talk about that right now. I'll make another video for you guys. I'm not even going to get into charts on this video at all. I want to talk to you guys a little bit about different stuff that freaks people out. You're going to hear RS, which is reverse split, okay? It freaks people the fuck out, and it shouldn't. It is what it is, and you're going to sell off too. I probably sell off sometimes. It is what it is, what it is, what it is. RS. All right, guys. Let me move my phone over here because this one is a long chat, okay? RS, reverse split, is when there's a couple different scenarios that they're going to discuss it, okay? You might hear that there's a vote coming up for RS, okay? Which means that they're going to vote yes or no to doing a reverse split. As soon as they vote yes or no, it's going to become imminent where it happens the next business day or within the next 2 or 3 days, okay? The company decides, but it's imminent. That's going to happen if it's voted yes, okay? So that's number one, that the vote. The second reason why they'll do an RS vote is so that they can do RS in the future without having to vote about it. So it's just giving permission for the company to act on it whenever they need to. Okay. For instance, why would they need to do that? So this company, Viezel, excellent company. A lot of good stuff going on. When you're under $1, you don't have stock market compliance, and you have to ask for extension so you can get to $1 for 10 days, so you can meet the compliance of NASDAQ or the New York Stock Exchange. Okay, so what ends up happening is Viezel is having a vote coming up on Monday. Okay, so people are sort of staying clear of the stock because they're fearful for what's going on. Wiesel is trying. They don't have compliance until December. I actually talked to the CEO yesterday, and on the phone, and asked them for a clear picture of what's going on. Essentially, what they want to do is they want to do a reverse. They want to have permission to do a reverse split at some point, not right now, but they want to have permission to do a reverse split in the near future or whenever they can, so that they can act on purchasing another company. If it comes into light. And what that does is it makes funds available if they do a reverse split. So let's say they have a company that they want to buy, and the company is $5 million, and they enact a reverse split of whatever the percentage is. This enables the company to get some funding from the stock market, and enables them to fund their purchase or whatever they need to do. What is a reverse split? What does it mean to you? So they come in different denominations. You might hear 3-1, you might hear 5-1, you might hear 10-1 or 30-1. Okay. What it does is, let's say you have 3,000 shares, 3,000 shares, and it splits 30-1. You divide that 3,000 by 30, and that's how many shares you get. Okay. That's how many shares you get. So what is that? 900 shares to 3,000, right? So if it splits 30-1, you get 900 shares. Okay. The price of the stock is 30 times what it closes at that night before the reverse split. So let's say it closes at, I don't know, 50 cents. Then it's going to be $15. Okay. Or if it closes at, I'm sorry, $15, 30 times. I'm sorry. $15, or whatever it is, 20 cents, times 30, etc. Okay, so it's 30 times whatever the close price is. Your value of what you're holding. So let's say physically you spend $1,000 for these stocks, whatever it is. The monetary denomination is not going to change, but once a reverse split takes effect that next day, your money can be affected as far as by it dropping a little bit. If it drops by $1, it's going to affect you that way. But starting off blank and fresh, it's going to be the same amount of money, because your money is the stock price goes up by 30 times 30, and you drop by 30 times 30 down. So the price itself is the same. So RS really, in certain situations, it's not great, but in certain situations, it is good. Let me give you another example. In mergers, it is very important that companies a lot of times have an RS built into the stock, or into their contract of purchase or acquisition. And it's just because what ends up happening is when they do a reverse split, let's say it takes a stock from $1 all the way up to $5. It opens up hedge funds. It opens up banks that are able to now buy the stock that couldn't buy it before. There's one that was trending at 27 cents, I think. DSS. Okay, you guys can do your research on DSS, and they did a 30-1 split, and it went up by $30, 30 times 27 cents or whatever, and it went up to just under $9. Okay, it's like $8.97, whatever it was. Okay, today unfortunately it got really red on it. It's like under $8 or under $9, but it was trending over $10 just a day or two ago. The market's just red today. But DSS, I bought it a month and a half ago. I kept it through the reverse split. They are purchasing a COVID-19 company up in Shanghai, and that company is worth $1.3 billion on appraisal, but their price is $50 million. And so that at some point they're going to get the press release. About the COVID-19. This thing is going to go through the roof. What happens also in reverse split is that the float goes down. So let's say the float was 30 million, divide by 3. Now it's 1 million. Low float equals it can move faster. And not only that, but because of the RS, now more people can buy into it, the larger banks and stuff like that. So anyway, that's my chat on RS. It doesn't mean the world's falling apart. However, it is a situation where you can expect as soon as you hear that the company agreed to RS or whatever, you can hear that stock plummet right away. It just is what it is. People freak out. It is what it is. Again, compliance on the market. If it's stock, they get notices upon notices upon notices. They have to be over $1 for 10 plus days in order to be in compliance with the market. That'll be one thing that they're required to do, reverse split as well, if they're not compliant and they have no more extensions and so forth. But again, mergers are one major reason why people do RSs, even if it's not needed at the moment, if they have an extension for compliance. Mergers are a huge reason, and also for the acquisition of other companies. So one last thing I'm going to chat about on this video, guys, I know I'm probably rambling on and on, I'm sorry, is how we do our due diligence and so forth. So number one, I find a good group of followers on Twitter. Okay, I find all the big guys on Twitter, and I have alerts on them. So I'm getting constant text throughout the day. My morning starts off with about probably 1 to 200 messages and or tweet responses within the minute, literally. And I have to quickly go through, decide if I'm going to respond or whatever. And it's not only people directly talking to me, but also all the people who are tweeting out different things that's happening. And sometimes I get validation when I'm hearing the same thing, like, offering, even though I can't read it real quick. I see offering on a stock. You put it out, and the stock drops, and you're off to the races on it. Or news, this company did this. The news comes out very quickly once the community starts talking about it. I do a lot of research online. I do a lot of hidden research through CEOs. I go on LinkedIn. I go on their Twitter accounts. I go on their Facebook accounts. I look to see what they've liked in the future, who has liked their posts. I go through, what they have posted about before and stuff like that. Your due diligence really is like being a detective. It is searching underneath rocks to find it. And when you find a hidden gem that no one else has found, you have the winner, and you can make the call at any moment you want, and you can control the domain by loading up and getting ready to get payday for yourself. What systems do I use? I use E-Trade again, and for scanners and or operating systems, Trading Ideas is a really good platform to consider. It's not that expensive. It's very easy to use. And again, looking for information online, Yahoo News. I do IBD News, and I follow a ton of people, and I'm in probably 7 chat rooms amongst people messaging me different stuff and so forth. So, guys, this is a little bit of a starter video to get you acclimated. What I did was, along with this video, I'm sending you a link to my chat room to get yourself familiarized. The one thing I could tell you is do your best to stay away from Robinhood. It's got a great platform for newbies who are learning to trade. However, once you start really trading, you'll find that they have a lot of glitches, and a lot of times they have a lot of downtime, and that causes you to lose money over time when things pop in the morning before 9 a.m. and drop, and there's nothing you can do to save yourself. So I would consider E-Trade, which is what I'm on, and Webull. Those are the 2 that I recommend. I do not share, links to join me or anything like that. And, for that, you just find it and sign up there. Okay. Another thing, Trading Ideas, again, it's a great website that you can learn to do. Listen, guys, don't go paying for freaking chat rooms and shit unless you know what you're getting yourself into. Top stock alerts, if you've seen them on Twitter, if you're doing any trading now, these guys, I think I was playing these clowns like $75 a year. I still pay them, by the way, but I deactivated them from sending me text messages. I just let them charge my credit card every year as a strong reminder on what a fuck ups they are. These people will send text messages like 15, 20 minutes after the stock has already popped and dropped and is dead. So I just want to keep you in mind not to spend that money. If you are inclined to join a chat room that you want to pay for, buy sell short. He is my mentor. He is the reason why I'm able to make all the money I'm making. I've learned a lot from this guy. This guy's top notch. He's been in the business for over 20 years. He is the man, the myth, the legend. He is the GOAT. That is the room that I would consider joining. I don't know what he's charging right now, but it is something to consider joining. And I think that you'll be very happy doing that. Again, I'm going to send you my link to my chat room along with this video. I hope this video is somewhat helpful. Then what I can do is in the chat room, I'm going to create a room for all the cops that are coming in, all the police-friendly people. And so that way you guys can socialize amongst yourselves and also with me. And at that point in that room, you should be able to ask all your questions that you have at that time. And I'll be glad, I'm a chatterbox, so I'm glad to answer any questions that you have. All right, so thanks a lot for tuning in my video. Sorry for looking straightforward. It's just the way I am. It just allows me to concentrate a little bit. But, text me. My cell phone is 240-882-8512. Tweet me on a DM or find me in my chat room. All right, talk to you later. Bye-bye.